Let's talk about the other heavyweights in the markets. And Reliance, it seems, is, irrespective of its whopping market cap, which is about almost touching 16 lakh crore rupees, has been falling for a fifth straight session. So what is it doing to the technicals of the stock? And what's ailing the stock right now? Is it getting oversold? Let me take it across to Somit to decode all of that. Somit?
Well, India's most valued company, that is Reliance Industries, with a market capitalization of close to 16 lakh crore rupees, is the only Nifty company to be in the oversold zone. Now, the company's RSI has touched below 30 for the first time since March, and the stock has been falling for the last 5 consecutive sessions. It's up today around 0.2%. Now, on a monthly basis, if you see, the stock is down for the second consecutive month, and also it has underperformed the Indian benchmark, that is Nifty 50. On a year-to-date basis, Nifty 50 is up around 8% while Reliance Industries is up just around 1%. Now, how has the stock reacted in the past whenever the RSI has dropped below 30? Now, in the last 5 years, if you see, the RSI has dropped below 30 around 8 times, and every time after a brief consolidation that we have seen in the share prices around those levels, the stock has always gained from that level. Now, what has been ailing the share price of Reliance Industries currently? Firstly, is the recent planned shutdown announcement that the company had given, according to Morgan Stanley, that could impact the company's earnings by around 1%. Apart from this, the street was expecting the company to announce a demerger of its telecom and the retail business when it comes to its AGM, but no such announcement has come in, and that has been a disappointment among the shareholders. Apart from that, the O2C segment earnings are expected to be weak given the fact that the Singapore gross refining margins have dropped from $15 to $9, and also the petrochemical margins continue to remain weak because of tepid demand coming in from China. Also, the company was benefiting because of higher Russian crude imports. However, the discount on Russian crude has now narrowed, which could also weigh on the company's earning going forward. And lastly, when it comes to the telecom business, no tariff hike means that the growth rate would be on the muted side. In fact, in the last 4 quarters, the average growth rate for the telecom business has been around only 2%, and this is because of an absence of tariff hike. So that is also one of the concerns when it comes to Reliance Industries. Now, what could be the triggers going forward for Reliance Industries? Firstly, on the retail segment, it's the upcoming festive season which could propel growth for the retail segment. Geo Air Fiber could boost the growth for telecom business because it's opened up a new segment of growth for the company. Apart from that, the new energy business, now that can act as a strong growth optionality going forward for Reliance Industries. And again, there is always an option open for the company to go ahead and demerge the retail and telecom business, and this could be the key trigger for Reliance Industries going forward. And lastly, if you see the valuations of Reliance Industries, they are trading below their 5-year average. The 12-month forward EV to EBITDA of Reliance Industries stands at close to 10.7 times, while the 5-year average stands at close to 12.2 times.
Right, okay, Somit, we'll leave it at that.